Can I use my VA loan to buy my parents' home? It's a question that I've been getting a lot lately, and we've also been helping a lot of people utilize the VA loan to do this exact thing. So, today's video, I'm going to break that down, how it works, what to be on the lookout for, and also understand if lenders could even do these because not all lenders are created equal. They all do have different requirements. My name is David Piatek. I am a loan officer and able to help you utilize that amazing VA home loan across the country. Schedule a call with me down in the description below. So, what is involved when it comes to purchasing a parent's house? Right now, you could be purchasing it for a variety of different reasons. They may be just looking to sell and downsize, which has been the most common one that I've come across. Or they're just like, hey, you know what? I want you to take over the home before I pass, so you could utilize it and maybe even leverage some of the equity out of it. Or they may just need to get some money for themselves to be able to take care of themselves, and you're just kind of stepping in and buying it to live in there. So let's break all of that down in today's video. So now remember, a couple things with your VA home loan. One, it's designed to be your primary residence, so you can't be buying it as an investment property. Two, a caveat to this is that you can't be bailing them out because they're in foreclosure. So you have two things here, or a concept. You have what's called an arm's length transaction and a non-arm's length transaction. So an arm's length transaction is between two unrelated parties, right? They have no relation to each other. And then you have an arm's length, the non-arm's length transaction, right? That's going to be pre-existing relationships like with family, right? And you can still utilize that with the VA home loan. Not an issue, but you have to just make sure that the lender that you're working with is going to be okay with that. Like we can do those because again, we do those all the time. So when you talk about another benefit of this is going to be that you don't have to put any money down. Even if they sell it to you, I've seen this before. Value of the property is like $500,000, but they're willing to sell it to you for $300,000. You come in, you're buying it for $300,000. Appraisal comes in at $500,000. That's okay. You just basically keep that equity in that property. That's not a big deal, and the lender can't really do anything about it. Now, for some people, they're like, "Well, can I utilize that equity?" Typically within 6 months of owning a property, you have full vested interest, and then you're able to do that. Actually, which reminds me, another way that you can do it is that if you are on the title of the property and you've been on title typically for 6 months, you have what's called vested interest, then you can actually refinance the house into your name and remove your parents off the title, and you can do that at the time of closing. And that just requires a quick claim deed, and it could all be done. But once again, probably has to be your primary residence. You have to show that it's your primary residence, like a bank account, pay stubs, benefits, driver's license, ID card, something that's showing that you actually reside in this property. So that's the two routes that we typically see people go down, right? Again, and I guess the third option would be from an estate perspective, right? And we just came across this the other day. We're helping somebody do this. They have 3 other siblings that are part of this estate, right? They're splitting the property. So the siblings are like, well, we just want to sell the property. But one of them is like, I want to keep that and I want to be able to buy it from them. So it gives you that option to use that VA home loan to do that. Now, important to note that you can have multiple VA home loans, and I have a whole video on that on the channel. So if you're not subscribed, please subscribe to VA Housing Education. We provide content around how to leverage and maximize your VA home loan benefits. Now, when you're doing this, can't stress enough that this is going to have to be your primary residence. There's no easy like, oh, I'm doing this as an investment property. This has to be your primary residence. If your parents continue to live with you while this is where you live, that's not a problem at all, right? There's no issues with that process, not one bit. You still have to qualify with income, credit, right? So income-wise, you still have to meet residual income, which we have a whole video on that. Credit-wise, technically, no, the VA doesn't require a minimum credit score, but lenders are going to have a minimum credit score requirement. Typically, they do. And really, if you are below a certain threshold on your credit score, it's what's considered a manual underwrite, and you have to meet all the parameters of that as well, which I do have a video talking about what's called an automated approval versus a manual underwrite. The details are in the weeds. There's so many things that go into a VA home loan that sometimes people get frustrated with the process because there's so many small details. And a lot of times we don't know the information up front, and then things will kind of shift and morph into something else with that process. One thing that I do also get asked a lot with this is that what if I ask for my parents to cover the closing costs? And that's a good question, because you would, from my side, when I look at it, I'm like, well, that could be a conflict of interest because they're selling the house at, like in my example, $300,000, it's worth $500,000. Would it be a conflict of interest for them to give them that credit for closing costs? We see it all the time, right? People will say, hey, I want to buy it at $310 and just, can I get a $10,000 credit because the house is going to appraise anyways? Yes, you can do that. But the key is it has to appraise. And some people that are buying these or refinancing what's considered a cash out refinance, when you have vested interest in a property you've been on title for 6 months, is the property may have some repairs that are needed. Now, typically those repairs are going to have to be done and completed before you buy the home. And if you're on a well and septic, you have to get testing on both of those, and those both must pass in order for you to even close on a home, which I can't stress enough. It's an important factor. Which leads me to, if you already have a home, and let's say if you have a really good interest rate on there, then you probably don't want to touch it. But if you don't, you might just want to, if you have enough equity in your property, you could technically just do a VA cash out, maximize that, and then just buy cash with the other property and just have one mortgage payment. You could do that, right? That might be easier because then you can move it. But, I'm not an attorney, but potentially just move it right into an LLC or a trust when no one even knows that you own it. Might be a good option. I don't know. That really is up to you to decide how you want to be able to go down that route. But having them be able to pay for closing costs, I think, is a solid way to become a homeowner. Now, that's one way of doing it. Well, that was like 3 different ways of doing it. The other option you have, right? The fourth option, you can check out my video on VA assumptions, but I'll kind of go over it quickly. If they have a VA home loan, right? So it wouldn't always be the case, right? Most of the time you're either buying it or you're refinancing it in some form or another, or refinancing your own place to be able to buy it in cash, right? So that'd be one of 3 ways right there. Is if they are a veteran and they have a VA home loan, they may have a really good interest rate and they really don't need the equity in the property. You can assume their VA home loan. Now, you could put your benefits onto theirs, or if they're like, hey, listen, we don't need our benefits anymore, which we do see a lot of, we're willing to, lock our benefits into the property. You can then, this is the only time you can do this, if you assume someone else's benefits, another veteran's benefits, and lock their benefits in, then you can actually pick it up as an investment property or a second home. There's no issues with it because occupancy has already been met. So that is a big one for you to kind of to think about if that's even an option for you. Let me know down in the comment section if you've thought about this process and how you think the VA loan can help you utilize that amazing benefit to purchase your parents' home. Make sure you guys hit the like and subscribe button. I'll catch you in the next video.